There we go. Can y'all hear me?
Yes, sir.
What's
Yeah,
going
rookie mistake.
on? That's what's up. How are you, man? Double O, you still out there in Cali, right?
Yes, sir.
That's what's up, man. That's what's up. All right, so we got some people on right now, but y'all know how it goes. They're gonna be flowing in and out or whatever. I wanted to get started this week to kind of build upon what we did last week. First off, I think that we have a new person join us. I think it's Kayla. She has some experience with investing. She kind of had a brief conversation with me as far as entry exits and risk management goes. So I will touch on those things, but y'all give Kayla a welcome. I think everybody else other than her was here last week. Let me get out of this 1 second. Y'all hold on. I want to get my slide deck up. Right. This screen has been giving me problems today, y'all. Okay, here we go. Okay, here we go. All right, let me go here. All right, let me get started from the beginning. All right, so as y'all know, pretty much y'all, this is, I want to be able to see the chat while y'all ask me questions. And this week, I'm going to do something a little different just to see how the meeting flows. What I want y'all to do is while I'm actually talking, just wait for me to finish the slide. And if y'all have a question at that particular point, go ahead and ask it. Last week we did it a little bit different, so I want to encourage, just engagement, so nobody's afraid to talk or anything like that. Let me get this slide up. All right, this is not popping up for me. Here we go. I want to be able to see the chat. Y'all hold on 1 sec. And when you want to ask a question, because the chat is not popping up for me, go ahead and just unmute yourself once I finish the slide, okay? All right.
Bet.
Good. Alrighty. Okay. So as y'all know, last week we touched on just my philosophy for the group, and then also my philosophy on how I invest from day trading, swing trading, and also long term investing. This week we're actually going to go into like a lot of the tools that I use. Don't be afraid. We have people that are experienced. We have people that are inexperienced. Y'all know my number one rule is that y'all can ask any question that y'all want. No question is a stupid question. Okay. The whole purpose of this webinar is for everybody to learn. If you heard it before, maybe I've shared it to you in a different way, or if you've never heard it, even better. But let's go ahead and get started. So first off, shout out to J Boy French. I've been knowing him 20 years. He was the giveaway winner. Congratulations to him. He was the one that won $1,000 and also a 3 hour session with me. So big shout out to Jay. He's been one of my biggest supporters since we've been getting started, and I believe that he'll be a right fit, for this mentorship. Oh, there go my chat, y'all. Okay. Okay, there I go. All right, I can see what y'all are saying now. There we go. I don't like feeling like I'm talking to myself. I don't know about y'all. All right, anyway. Okay, so y'all follow all my social medias. Go ahead. Shit, Lucky, that's too funny. Y'all follow all my social medias. It's heavy returns on every single little thing. I don't know if y'all got it in y'all's email last Sunday. If y'all don't, y'all need to go to heavyreturns.com/outlook. If you type that in and you register every single Sunday, you'll see a written version of my outlook on the market. Oftentimes, y'all will see like my videos on TikTok and Instagram with me talking about earnings and stuff like that, and other factors that kind of affect the stock market throughout the week. Y'all stay tuned for that. And in addition, I will start filming a show called the Heavy Return Show. and that'll be just the video form. Either way, I'm going to be able to push this content to y'all however y'all like it. Written, video, and then also I'm going to push it to podcast as well. But yeah, y'all go ahead and follow. Every Monday will be an earnings preview. Every Friday will be an earnings recap. Okay. And then after that, anytime y'all want to talk to me, y'all jump into Discord. Y'all know I'm pretty responsive in there. So let's go ahead and get started. All right. So, number one. So we're gonna start with stocks, and then we're gonna go to options. Obviously, options are a little bit more advanced, but either way, for y'all that don't know this, what is a share, right? So a share is nothing other than a small piece of ownership for a company. For instance, it's like if you say that you own Apple stock, well, that means that you own a tiny piece of Apple, and it is at that particular point, like I told y'all last week, that y'all are investors. It doesn't matter how many shares you have; it could be a fraction of a share. So long as you have that particular stock in your portfolio, you are now an owner, and we need to start conditioning ourselves to think like that, because there's a lot of different things that are going to come up in this particular webinar that are going to empower you to want to go ahead and double down on the things that y'all buy. If any of y'all bought BTC, QQQ, or what else did I tell y'all? VOO, y'all let me know in the chat. I want to see if y'all made that investment like we talked about last week. It was only $1. Oh, good job, TT. You got you some QQQ. That's good. That's good. That's good. So T was the only one that bought. All right. Okay. Good job, Angel. I know you be buying. I'm gonna get like you. You buy every day. I'm gonna get like you. Okay. So, all right, y'all. So, what is a shareholder, right? A shareholder is anybody that buys a share of stock. That's it. You're an investor. Okay. That's it. The only ways that shareholders can make money is three important ways. Let me go down to the next slide. This thing is all right. So number one is the example that everybody knows. It's capital appreciation. If you own a particular stock, if it goes up in value, then obviously the difference the difference in price from when you bought it from what it currently is at, that's either your gain or your loss. Okay. That is the number one way how people make money from stocks. Super basic. Okay. The next particular thing is called dividends. We talked a little bit. Good job, Double O. We talked a little bit about dividends last week, and I have some visuals that I actually want to show y'all because it's a very great index fund that I'm in that I actually want to tell y'all about, and I'm very, very excited. We'll get to that. But with dividends, all that's saying is, hey, the board of directors, they'll get together and they'll say, hey, we want to incentivize our shareholders. And the way that they do that is by issuing what's called a dividend. And a dividend is no different from profit sharing. They take a percentage of the cash flow that they have and they tender it out. Most famous as far as dividends go is Coca-Cola. They are a company that has issued dividends for more than 50 years plus. You're talking about Schwab's dividend fund. Yeah, well, that's a good one too, Double O, but I think I got one just slightly better. I'm gonna get to that one. But yeah, so dividends is nothing but profit sharing. Okay, so the number one way is capital appreciation. Number two way is dividends, and then number three is buybacks. Okay, so with buybacks, all that means is that the corporate board is going to purchase stocks back and put them back into their own internal supply. When they do that and they take things out of circulation, what that does is that pushes up the particular stock price. So again, I have an example right here that I actually want to show y'all on that. Here we go. Nope, that's too fast. Okay, corporate buybacks, right? Okay, so say for instance, you buy Apple and Apple only has 1 million shares. We know that they have way more than that, but let's just say that Apple has 1 million shares and it's 100 a share. And let's say Tim Cook says, you know what? Let's incentivize our shareholders. We want to give away some of these profits so that they can invest with us for the long term. Okay. How do we do that? Well, they're going to announce during their earnings a buyback. And if they do that, what they'll do is they'll normally take out a set amount of stocks off the table. In this particular example that I threw out at y'all, we had 1 million shares, and then they took off an additional 100,000 shares. and that leaves us with 900,000 shares. But if you already had I just lost my train of thought. But if you already had, like, let's just say one particular share, well, you just made an additional $11 because what they did was they took the supply away and your piece of the pie got bigger. Okay, does everybody understand that?
Yes, sir.
All right, gotcha. Okay, so I want to jump to dividends and dividend reinvestment. Okay, so there's a stock called BTCI, and what it does is it tracks Bitcoin appreciation, and it's with Neos. Neos has some of the best dividend paying funds. All right, with BTCI, they have a dividend yield of 38%. That is a lot. Yes, Augustus. Yeah, double O. It's just like that, just like a reverse split, brother. But anyway, so back to BTCI. So with them, they issue out a 38% dividend every year. Okay. So what that means is if you put in $10,000 at the beginning of the year and you stay in that entire time, what'll happen is you'll gain $3,800. Yes, 38%. You'll gain $38. $3,800 on that original 10,000. Okay. Now, some people will say, "Hey, well, I'm gonna run off of my 3,800 and I'm gonna just go and put it in something else." But y'all know that I've advised y'all to reinvest your dividends and to activate drip. If you do that and you allow for the money to stay on the table and you reinvest into these things, what'll happen is every single year that will compound over time. Now, if you look at my table, year one, 38%, right? That goes to 13,800. Okay. Well, you kept it in there. So that's another 38%. Now it's 19,000. Next year, 26,000, 36, 50, all the way down to 250. That's a quarter million off of $10,000 in a matter of 10 years. That is astronomical returns. Okay. There's a little bit that goes, like, there's a little bit additional things that go into it, such as NAV, but I don't want to bore y'all with that. It is important to be aware of NAV, but forecast it for the future. This is what this particular stock will do. So that's why I keep telling y'all to invest in the BTCI. All right. I'm not gonna tell y'all nothing that ain't gonna beat the market. Okay. All right, we talked about that. All right. So next up is price versus value. This gentleman on the screen is obviously the greatest investor of all time, Warren Buffett. Y'all should know who he is right now. He is basically the Michael Jordan of investing. With Buffett, he's what everybody calls a value investor. Okay, the way that he invests is for the long term. Warren Buffett is not a day trader or anything like that. Anything that he purchases was always for the long term. With Warren Buffett, he came up with a great term and a great phrase, and what he says is price is what you pay, but value is what you get. Okay, and what that always meant to me was that I can purchase a stock that's undervalued, that I've done all of my valuation metrics on it, and I've read every single fundamental report, and I've done my technical analysis, and everything is telling me that this stock is worth more than what Wall Street thinks it is. And that's what I'm gonna teach y'all tonight. But when you do that and your value is under your price, that's what we call undervalued. We talked about that during the last session. Now, oftentimes they'll be on the opposite end. They'll overpay for things. And we're going to talk about an example that Desiree brought up, which was Lulu. But that is a good example of a stock that is overvalued, something that is more expensive than what the underlying assets tell us. And again, we will talk about these metrics very shortly on how to determine that. So you have undervalued, fairly priced, and then overvalued. So the main question that a lot of y'all want to know, and y'all can still see my screen, right? Y'all can see all of these slides, right? Just want to make sure.
Yep.
Yes,
Yep.
sir.
Okay. All right. Bet. Okay. All right. So the main way that we value a business is with these particular metrics. We'll dive off and we'll have a whole entire webinar on just valuation. Right now, all I want y'all to focus on is what's called free cash flow. All that is what is the amount of money or the amount of cash that's left over after paying the bills? Is that growing or is that diminishing? If you look at that, that would often tell the story of a stock, whether or not it's undervalued, overvalued, or fairly priced. Okay. Oftentimes, people will look at these particular stocks and they'll just look at them like they're just ticker symbols, and they'll look at the gains and they'll just want to just jump in. They won't even look at the story or the company behind the particular stock. And when you do that, you're doing yourself a disservice because you're chasing returns. And whenever you do that, you're going to lose money every single time. The way that I want y'all to envision these things is like they're businesses, because that's exactly what they are. They are not just ticker symbols. They're not just returns. What they are, they're underlying businesses. For instance, Apple, y'all know it, technology. Coca-Cola, products, and then also Teslas with cars. Y'all have to look at the underlying company itself. I know a lot of people, they just want to trade based off of what they hear from other people. And again, like I've told y'all since we've been talking about all of this, y'all need to understand that at the end of the day, y'all have to do your own research. And what does that entail? Well, that entails, what is this company's story? You have to look at it like a business owner. We don't buy things just off of what we hear. We buy things off of what we research. Okay. So what I like to call, anytime I'm valuing these businesses, I apply what's called the underwriter test. So I'm sure everybody's in here. We've probably been to a car dealership and you were very, very excited to get this new car. And you go in and your credit is jacked and you not understanding why these folks not giving you the money to go ahead and buy this car. Because you really, really want it and you want a chance and you want an opportunity and all of those other things, but they said no. Well, the reason why they did that was because, well, your numbers didn't make sense. These particular people looked at your assets, which was probably your employment, or saying that you didn't make enough money, or they looked at your debt, your credit history, if you had collections, charge-offs, things of that nature. I'm sure that everybody can understand that. We have a couple realtors in here, so with that being said, if you apply that same exact mentality when it comes to investing, and whenever you're looking at these particular stocks, again, this will greatly benefit you when you're valuing them. For instance, before I buy a stock, I'll always look at the fundamentals. Okay. Somebody will repeat a stock to me 10, 20, 30 times. And when I finally dive down into the fundamentals, that's when I get a clearer picture. I don't buy a stock off hype. I don't buy mean stops or things like that, because again, I don't like losing money. I did in the past, but since that time, I've been a lot more profitable. Okay, and so that's what I want y'all to apply. Think of it as somebody's coming to y'all to either borrow some money or purchase a vehicle at your dealership, and that's the way that you need to look at that before you go ahead and buy these particular stocks. Okay, and we're gonna go through a couple of them. Okay, the way we look at that is their statements. Okay, their report cards. So when we go to the dealership, they're looking at our credit report. Same thing with businesses. We look at their statements. We look at their 10Qs and we look at their 10Ks. Okay, so the 10Q comes out 3 times a year, every 3 months, and then the 10K comes out once a year, annual. Now, the important thing to think about it, other than the fact that the 10Q comes out every 3 months, is that those are unaudited. So oftentimes, some of those numbers either don't make sense, or a lot of these companies are saying things that they know is not being vetted. If you really, really, really want to truly know a company, you go to that annual report. And the best way that I could give y'all an example is like the difference between y'all logging into Credit Sesame and then y'all going to Experian. Experian gonna tell you the real if you get it direct. You go to Credit Sesame, they gonna lie and tell you got an 800 credit score, but Experian to tell you the real. That's kind of how y'all need to look at the 10K versus the 10Qs. Now, I'm not saying that the 10Qs is not accurate information. I'm just saying that oftentimes you'll see a lot of things being adjusted, amended, or vetted in the 10K. And every time they release these reports, that's what they refer to as earnings. Y'all have heard me say earnings a million times, and it is very, very, very important because that's when you get an update on the progress of the company. Okay, because I invest into a lot of companies for the long term, but if there's something that pops up into these reports and the story changes, then I'm looking to exit. And the best way to find out that information is during these reports and their earnings calls. Okay. The app that I gave y'all is called Quarter. It's QUATR. They took out the E. If you download that one, you're able to listen to any company's earnings calls. And it is on those calls that I've learned. First off, you're going to learn a lot more just about investing in general. But second off, you'll understand the real and what these CEOs are saying to their shareholders. And after a while, after listening to multiple and just over time, you'll start to understand what's real and what's not. And again, this is no different. Being a finance manager at a car dealership, if somebody tells you something, you know what's real and what's not. You know, you've had that experience. So y'all need to do the mental reps of listening to these earnings calls. Some of them are boring, I'm not going to lie, but some of them get kind of spicy because oftentimes shareholders or other people, like people that are dissenting on the board, they'll have arguments or discussions about certain things, and it gets kind of funny sometimes. So some of them are pretty interesting. I think that y'all should definitely check them out because it'll benefit y'all. All right, I already touched on that. Okay. All right. So with the fundamentals inside of these reports, you want to look at the income statement, the balance sheet, the cash flow statement, and then of course you want to listen to the earnings call and then guidance. So number one, the income statement is did they make money? Because at the end of the day, if they didn't make money, why are you still in that stock? Okay. If they talk about the balance sheet, like what do they owe versus what do they own? Okay, ownership is big. Okay, loans are big. We got to look at debt, things like that. You got to see if this company is suitable to oh man, what's up, Don? You got to see if these businesses are suitable to use your hard-earned money. If you start looking at it like, hey, is this company worthy of my hard-earned money? Then I promise you, y'all will make more wise decisions. Because I know y'all probably work, you know, everybody on here I know, well, all the ones I at least know personally, y'all some very hard workers. And I admire y'all. Y'all get up every single day and y'all do what y'all got to do to take care of y'all family. And so do I. I'm not just giving my money out to these folks that's going to burn through it. Okay. And that's the way that y'all got to look at it. Y'all got to be stingy with y'all's money. Okay. Y'all don't give y'all money to the cousin that ain't going to pay you back. You're going to give your money to somebody that y'all know that's going to pay you back with interest. And if you, again, if you apply that mentality when it comes to these stocks, y'all will be fine. Okay. All right. So the most important formula is the profit formula. All it is just revenue minus cost. Okay. And the difference between that is your profit. How much money we brought in, how much money we got to pay, what's left. Okay. That's the most important thing. Don, you a funny man. All right. So the higher the margin is a higher, the healthier business. Okay. So if you're pulling in $1 billion revenue and 30% of that is profit, then that's pretty strong. On the flip side, if you're pulling in a lot of money, but most of your money's going out, then you're very slim. Again, that is no different from the real life, right? We've all been paycheck to paycheck, no matter what our income levels were. Sometimes when we make more money, we spend more money. So who do y'all think will be, you know, more fit? The person that is paycheck to paycheck, or the person that, you know, they're managing their money well, they're budgeting, they're being frugal? I'm gonna go with the frugal person. Again, these companies are no different from us. Again, if you humanize these companies and you look at it from that perspective, then you'll be fine. And I'm gonna keep repeating that so that it's ingrained. I know y'all probably like, he done said that 10 times. Yep, and I'm gonna keep saying it. All right. So income statement. Okay. So the income statement is the money story. All right. That's just the money that's coming in. That's all it is. That's all that I want y'all to remember for now. We'll dive off into that during our valuation class and we'll actually go more in detail. But I'm gonna show y'all an example very quick, but I'm gonna just blow through that. Balance sheet, again, cash versus, well, yeah, ownership versus equity. I mean, ownership versus debt. How much do you owe versus how much you own? Okay, what does the picture tell us? And then we have a cash flow statement. Remember, that's the most important metric. How much cash are we keeping after everything's said and done? After investing, after financing, after operations, what's left over? Is that number growing? Now, what I really want to talk to y'all about is with free cash flow. Don't look at any of these numbers in a vacuum. Okay, it's not just you see a high number. Oh, that's good. That's a lot of money. No, you have to look at these numbers in comparison to the previous reports. Are these numbers improving? Are they getting worse? No different than how the underwriters would look at your credit whenever you're trying to qualify for a house. They're going to check your credit report several times before you close. Okay. They want to see if you're improving, staying the same, or getting worse. So don't ever look at these numbers without context. And the way that you get context is that you compare them to the previous reports. Okay. So what does a good company look like? Well, a good company has their revenues growing, their profit margins going up, earnings is going up, and then the management is, talking real sweet on the earnings call, and they're raising guidance. So what is guidance? Guidance is nothing more than a CEO highlighting like some important part of their business and saying that they're going to do better. For instance, NVIDIA did amazing today, in my opinion. I don't know if it's going to go down tomorrow because Wall Street like to play. But either way, NVIDIA beat top and bottom line numbers, which means that they brought in more revenue than expected and they brought in more profit than expected. They also raised guidance. With guidance, what that means is they said that they were going to build more AI data centers. I made a video on that. So they're going to build more AI data centers. And then they also announced a buyback. A buyback is included in guidance as well. And then they also announced that they're raising their dividend from a penny to 25 cents. So again, everything that I just told y'all, dividends and buybacks and earnings, everything, NVIDIA hit on every single thing on the board. So in my opinion, I'm going to break down their report, but in my opinion, I think that NVIDIA has done an excellent job. And it is the type of business that I would personally be comfortable putting my money into because I have and I will continue to do so. On the flip side, okay, you got unhealthy companies. The numbers are shrinking. The margin is shrinking. They're taking losses. They're taking on debt. It's just a bad story. This is your cousin that ain't never got a job, in and out of jail. Okay. So, all right, Sean, that's a great question. NVIDIA, 25 cents is okay, but with NVIDIA being $200, you got to own a lot of shares to really you have to own a lot of shares of NVIDIA to really see a good amount of money. So yeah, they raised their dividend. That's good, but I wouldn't go to NVIDIA specifically just because of their dividends. I wouldn't go to NVIDIA just because of that. Okay. There's other ones, like I told you, BTCI, you got SPYI, QQQI. Most of the stocks that you see that end with an I, most of those are dividend paying stocks. So if you want, what I could do is I could send you a list of the top 10 dividend yielding stocks, and then we could discuss them. Which brings me to a great point, right? So just because a stock has a great dividend does not mean that you should invest into that stock. Why is that? Well, because at the end of the day, if this particular company is issuing out dividends, but they don't have the cash to do so, then why? I mean, where are they pulling this money from? Okay. So dividends are great on companies that have enough cash to do so. Yes, there you go. There you go, Double O. Exactly. And that's basically NAV, right? So y'all have to be aware of a business that has enough cash to pay that dividend. Does the dividend Like, does the means justify the dividend? Is the way that I kind of think about it in my mind. Okay. All right. So I want to share with y'all something. Let me see. I'm about to pull up this. I'm gonna pull up Lulu. Des, are you on? Are you on this? I want to talk about that Lulu stock that we had a conversation about.
Yes, I'm here. Mm.
I ain't gonna pick on.
Hey,
What's up? I ain't gonna pick on you. I promise. I'm not.
all right.
Yeah, I just want to educate you, and we're gonna talk through this one, okay? So, can everybody see my screen? Y'all can still see it?
Ye-
I can see it.
yes.
All right, cool. All right, so every time I'm valuing a company, the first place I go is Yahoo Finance. A lot of people use bar chart, unusual wells, things like that, but Yahoo Finance is pretty easy. So all it is just finance.yahoo.com, and you type in the ticker symbol, okay? So we got Lulu Lemon. All right,
Hmm.
okay. I want to go and zoom out, okay? Well, let's do the 1 year. Okay, so first thing, before I even dive off into like a company and me invest to it, I don't want to call it the gut test because you should never invest off the gut, but you should at least be aware of what the industry is. Is it an industry that's recession proof? Is it an industry that survives trends? Now, Lululemon is a clothing brand. Okay, I don't know about y'all, but anytime I think about clothing brands, I think about FUBU. I think about Tommy Hilfiger. I think about what else we used to wear, Carl Kanai, and all of that stuff we used to wear back in the day, right? I don't think I don't believe that clothing companies are great companies for the long term. Okay, I don't. Maybe you might find elite because something is hot right now. Maybe the kids are wearing it for the next couple years. But again, y'all will notice that a lot of these clothing companies, they're just only one I can really think about that's kind of survived the test of time. Yeah, bar chart is the truth. The only one that I can think about that survived the test of time is Nike. That's about, and then they've been having some trouble. But either way, so that's the first thing, right? I just kind of just think, okay, what kind of company is this, right? And after that, we dive into the financials. Okay, so on this left hand side, y'all will see financials. Okay. And that too, you can get your clothes off Printful for the low. You got to give us a class on that, Sean. But yeah, so okay, so financials is on the left hand side, like we spoke about, is income statement, balance sheet, and then cash flow. All right, those three things. Okay. After you go down there, you'll see the breakdown. Okay, these are annual reports, so these are 10Ks. Okay, these are all 10Ks. These are numbers from their 10K reports. Okay, Lululemon reports every January 31st, so their report is going to come out every January 31st. Okay, since I want to say since 2023, y'all can see that their total revenue has been increasing. Okay. So you may sit there and say, all right, man, they making more money, right? They're making more money. They doing pretty good, whatever. Okay. Then you would jump down to their gross profit. Okay, what are they profiting after paying out their cost, their cost, okay? After that, you'll see that this particular thing, that this particular number is increasing as well, okay? 4 billion, 5 billion, 6 billion, and then boom, from 2025 to 2026, it stayed the same. Why wasn't there any growth in this company? Okay, all the kids are talking about it. So I'm thinking to myself, I'm like, all right, well, let me dive down into it a little bit more. So then, after I look at the annual, then I go into the quarterly. Okay, you'll see. All right, profit in January 31st. That first reporting, which would have been Q4 of 2024, was at 3.6, and then boom, it dropped to 2.3. Slowly went to 2.5. So you mean to tell me for about a year, about close to a year, like their next three reports after they reported that Q4 2024 report, their total revenue brought in actually went down. Okay. And also their profit margin went down. Y'all see that? Okay. Now, when you come to their Q4 of 2025, they did better. Okay. These numbers went up. But I'm thinking to myself, I'm like, all right, so April 30th, July, and then you got Halloween, right? These numbers weren't that great, but this number was boosted during the Christmas sales. Okay. That's the only reason why they made more revenue in these particular years is because of just basically December. Outside of that, they haven't excited me as a company. Okay. That's what I want y'all to look at for the income statement. It's total revenue and gross profit. Now we're going to jump down to total assets. Okay. So with total assets, that number has, to their credit, that number has increased year over year. 3 years ago, it was at 5.6 billion. Now it's at 8.4. Okay. Their liabilities have pretty much stabilized at about 3.5. And then their equity has also went up in addition to their net tangible assets. So if you stop there, you're like, okay, well, man, Lulu Lemon, they're all right. So no, so Don, I'm not saying to exclude them. What I'm saying is to look at this, look at the particular stock and understand why those numbers are appearing that way. Yeah, there you go. There you go. Exactly, Double. I appreciate that, man. That's exactly what I mean. Thank you. So income statement says that all right, it's decent. Balance sheet is decent. What does the free cash flow say? This is gonna tell y'all the real story every single time. Okay? So from 2023, they made about 327 million. Okay? That jumped to 1.6 billion in 2024, 1.5 billion in 2025. But in 2026, despite them having that great holiday sale, their free cash flow dropped by 600 million. It went from so again, these numbers look like a million, but it's not. This is quoted in millions. So what this number is actually reflecting that this is quoted in, this is 1.5 billion. Okay, this is less than a billion right here. So it went from 1.5 billion to 921 billion. That is a lot of money that this company lost. So I still I don't just jump straight to the free cash flow. I always look at these stocks in great detail. You know, that is a reason. That is the second reason why I personally wouldn't invest into it, Desiree, is because number one, I don't like clothing companies. Number two, they lost 600 billion in a matter of 1 year, despite having a great December or holiday months. You know, those last little 3 months. Okay. All right. So I want to jump to, let me go to a better example, SanDisk. Okay. All right. So with SanDisk, all everybody's talking about right now is AI this, AI that, AI. All right. What AI needs is memory, and that's what SanDisk does. They provide memory for all of these companies. You have to go to them in order to, do a lot of your chips and come up with these things. Now, looking at their income statement, I believe that it's amazing. So in 2023, they made 6 billion. It increased to 2024 to 6.6. 2025 is 7.3. Well, look at here, TTM. Okay, so TTM is the trailing 12 months. What that means is it's not the reporting year. It's just whatever today is and the previous 12 months prior. Okay. SanDisk went from 7.3 and almost doubled up to 13 billion just like that. That is amazing. Okay, so I'm like, all right, it satisfies the first test, the gut test. Number one, it's an AI. Technology gonna be around at least, I would say, the next 30, 40 years. At least during our lifetime, I believe that technology is going to be one of the most profitable sectors in the stock market. All right, so with this one, it did 13.1 billion. Okay. Then I jump to the balance sheet. And I don't know why they're not reporting everything right here, but we're just going to do 24, 25. The total assets did go down a little bit, but they had liabilities that had went up. So if I'm not mistaken, I believe that they had took out a loan to increase some kind of infrastructure that they had. So I'm not mad at them for financing anything to go and build the company. It's not like they're paying things back if they don't have sufficient cash, because they definitely do. Jumping over to the cash flow. Okay. So y'all will see in 2023. Hey, what's up, brother? What's up, Dom? How are you, man? All right, so in 2023, this particular company, their free cash flow with SanDisk was negative almost $1 billion. Okay. That was back before AI kind of took over, what everybody talks about. So once their business got a little bit better, they cut that debt in half pretty much. Okay, in 2024. Then they made another big dent in it in 2025. Well, remember earlier I said their incomes on their income statement, they brought in 13 billion. So now the free cash flow is 4.4. So that is how much cash this company is bringing in without any issues. No, after paying debt, after investing, after paying payroll, you name it, they're making 4.4 billion in this last trailing 12 months. You compare that to Lulu Lemon, and I think everybody here can now understand what's a healthy company versus an unhealthy company. Okay,
Yeah.
you got it?
Yes.
All right. So with Lulu Lemon, let me go back to it. Okay, I want to show you something. So with Lulu Lemon in the past year, they were at 334. 334. That's what the stock price was. Today that stock price is 124. So you would have lost, 70% or whatever that percentage amount is of whatever you invested into it. Vice versa with SanDisk. 1 year ago, they're not even pushing me out. But let's just go back to yeah, actually they are pushing me out. Okay, so 1 year ago is at 107. Right now it's almost at 1400. It actually touched 1500, but right now it's at 14. So why did it go up so much? Well, so we could have made money off. Absolutely, Sean. You could have took puts. You could have definitely took puts. But here's my thing, man. Like, I don't like I don't like buying put. I like selling puts. I don't like buying puts. The reason why I don't like buying puts is because the market is literally rigged to go up. It is in everybody's best interest, and it starts with the politics, but it is in everybody's best interest for everybody money to go up in value. With that being said, okay, so a put, good question. So you have we'll dive off into options, but what a put is basically saying that you believe that the stock is going to go down in value, and if you are correct, you will make money as it goes down in value. Do you understand that one, Pam? But yeah, Sean, you would have made money. Yep. Okay. Perfect. Perfect. Yeah, you would have made money. Okay. So let me get back to. I want to go back to my. Where is my thing at? Okay. All right. Okay. All right. So we're gonna start our options discussion. Okay. I need y'all chat up for this one because this one's a little bit more advanced, but y'all will get it. We'll break it down. All right. So what's the option, right? So an option is nothing more than it's a right, but not the obligation to purchase or to sell a stock at a fixed price by a certain date. Okay. Again, I'm gonna repeat it one more time. Option is you have the right, not the obligation, to buy or sell a stock at a fixed price by a certain date. Okay. The difference between a stock and an option is stocks are like owning a house. You own it. Can't nobody take it away from you other than the government, of course, but can't nobody take it away from you. And at the end of the day, time helps you. You can hold it forever and you can pass it to your children. With options, it's like leasing or renting. You don't own it. You just have the right to access it for a certain amount of time. If y'all look at stocks like owning and options like renting, then that's the story. Okay. The reason why people use options is because it takes less money to make more returns. Okay, you can is more leverage included with options. But whenever that happens, we all know that if you can make more money, it's an opportunity that you could lose more money. Okay, if you're in an options contract and your option contract expires before the it expires before it touches that particular stock price, then you'll actually lose. You'll lose out. It'll expire worthless. And we will talk about what's called moneyness. I just want to give y'all a precursor to that. So to answer your question again, Pam, so calls means that you believe that the stock will go up in price, and put is you believe that the stock will go down in price. It's as simple as you pick a direction, meaning you're going to pick a call or a put. You pick a strike price. What do you believe the price will go? And then you pick an expiration date. Okay. That is at its most simplest form. It gets much more advanced down a couple of slides, but I just need y'all to understand that. The best way that I kind of tell it to myself is I call you up, but I'm gonna put you down. Okay. If y'all could kind of remember that little acronym, that's the best way that I've always taught myself. I'm gonna call you up, but I could put you down. All right, so these are the three things that differ from stocks, other than fees, of course. But you have an expiration date and you have a strike price. Okay, so it has a ticker symbol just like a stock, and you make money off the appreciation of it just like a stock. But your two main factors are strike price and your expiration date. Okay, every single options contract is worth 100 shares of whatever that particular stock is. So for instance, if you want to buy 100 shares of Apple, instead of you forking over that amount of money that it takes to do that, you could pay a fraction of that by purchasing an option. No difference from renting a house. If you want to rent a house, then all you have to do is you go get a contract with the landlord or whoever owns it, and you now rent that house for a fraction of what it would cost. Renting is much, much less than purchasing. And we all understand that concept. I spoke about moneyness. Okay. You have what's called in the money, you have at the money, and you have out of the money. And I'm going to break all of this down. I know it may be Greek to some of y'all, but I'm going to show y'all visually what I mean. When you have a particular option and the stock is going in the direction that you believe that it is, it's going to gain value to the point where you're now in the money if it is past that particular stock price. Okay, think of your strike price as a target price. Okay, and with at the money, the stock price is literally equal to what the strike price is. So for instance, we were just talking about SanDisk. SanDisk was at, I believe, 13.44. So if your strike price is 13.45 and you bought a call, then you're not yet in the money. Okay, because your strike price is 13.45, but the price is only 13.45. Some people would consider that at the money or close to the money, but it's not actually in the money because you're not past that particular point. You're considered to be out of the money because strike price has not been hit yet. Do y'all understand that? I need some thumbs up.
Yeah,
Yes,
I understand.
you got that, Sean? Okay, thank you, brother. All right, so the best way, okay, so here's the thing. With options, there's something called the Greeks. And if you understand this, you'll understand everything there is to know about options. There's four main ones, and I'll break all of those down, okay? But Greeks are a formula that the market makers use to price these options contracts, okay? Y'all hear me say leaps, leap, leap, leap. All that is I'm buying an options contract for a long time. On our last webinar, I told y'all that I like buying option contracts for at least 9 months to 2 years. Okay. With that, the Greeks don't matter as much because you have enough time. Okay. So theta doesn't affect your contract that much. Theta is time decay, and I'll break all of this down on the next slide, I believe, or next couple slides. All right. But when you're day trading, when you're actually like in it, then those Greeks can tear your contract up pretty fast. Okay, so you need to be aware of the Greeks if you're day trading. If you're in leaps, you could kind of just look at delta. You could take a peek at gamma. Okay, cool, and volatility. But if you look at the theta is not going to affect you as much on leaps until it gets closer to the expiration date. Now, when you're day trading, now all of those things matter. Delta, gamma, rho, theta, all of them. Y'all name the whole alphabet if y'all want. But either way, those things will affect your price because time is of the essence. With options contracts, if you want to make money on them, but you want to be safer, then you want to buy yourself some more time. Okay, you want that expiration date to be longer in time. Now, the trade-off for that is that these contracts are going to be a little bit more expensive, but it's because probability is priced in. And I think I had that conversation with Don, is that I'd rather pay for an expensive probability than a risky lottery, because then you're just donating. Okay? There's no difference from you going to the gas station and you buying a lottery ticket over 20 years and never winning. That's the best way I could paint that picture for y'all. Okay? So I do day trade as well, but the way that I day trade, I don't go based off of the Greeks directly. There's other things that you can look at, such as volume, to help you. But I don't want y'all to dive into day trading at this particular point until we get a hold on this. For now, my suggestion is that y'all do long-term investing and then also leaps. Okay? So one of the major Greeks that everybody talks about when it comes to options is what's called delta. Okay, so delta is basically, all it means is that whatever your delta is, that'll tell you how much the stock will move. So if you move a dollar on stock movement and the delta is 0.50, that means that you're going to gain an additional 50 cents on your options contract. Okay. And same thing, if it's a 0.75, if that stock moves by a dollar, then you're going to gain an additional $75. Okay, and we'll talk about option contracts and how they're priced, but I just need y'all to understand what delta is. But here's the thing, with delta is essentially like a probability factor. The higher the delta is, the more likely you are to for that option contract to expire in the money, which is what you want. Because if you're in the money when the option contract expires, you don't care, because your options premium is more than, you're in the money. You already made a good amount. You know what I mean? You're not losing at all. The only people that should be concerned about those particular things are when they're out of the money. Okay, so you'll have higher deltas the deeper you go in the money, to the point where you have a delta of 1, which is essentially like saying that you own the stock outright. Gamma, think of delta. I mean, think of gamma as if it's acceleration. So if delta is speed, then gamma is acceleration. It's how fast or how explosive delta can change. The stocks that have the highest gammas are the ones that are shorter in time. Gamma does not really matter at all for the ones that are in leaps. So if you're going to stay away from leaps, if you don't want to be super risky, then you don't even have to worry about gamma at all. If you do, then you have to tune in to when we actually have our day trading course, and I'll break that one down further. All right, so this one is the most important one. Okay, theta. All right. So with theta, every single day that market closes and then opens back up, that tells you how much your option contract is going to lose value. And we're going to go through all of these numbers. I'm going to give you visuals. Y'all will get it in a sec. But theta is very important, because if you have to be aware of theta, because if you have an options contract of, let's say, of $1,000, but your theta is 0.9, well, you losing $900 today, and you only got $100 left the next day, which means your options contract is probably going to expire that next day. But you need to be aware of theta, because you can literally calculate how much money you're going to lose with each passing day based on theta. All right. With Vega is volatility. again, this affects you. What volatility does, it affects the implied volatility or the expectation of what investors think this stock is going to do. Okay, what y'all will notice is before earnings with IV is what we call it. Everybody, like when there's these large companies, everybody thinks that a lot of these companies are going to explode in price. So then IV will be super, super high. And let's say you bought that contract right before the close and your IV is zero point 0.3. But then tomorrow when the stock market opens up, and even though the price might have went up, if IV dropped, you could still lose money. Okay. And Don, I think we had that conversation the other day. You lost money in an options contract, and it was because of IV. It was because the market expected a certain move and you didn't get that move. Okay. IV is another probability factor, and we will go through that one as well. Row, I mean, yeah, there you go. So row, it doesn't matter. Row doesn't really matter for day traders. For leaps, it kind of affects you. What it is just nothing, no different than interest rates, treasury bonds, and things of that nature. It's basically what is your options contract and its sensitivity to overall rates in the market. If you're investing in the right stuff, it's not going to affect you that much. But I had to talk about it. Again, IV is the market's expectation of future movement. Okay, high IV means you expect a big move, which means your options are expensive, and then in the inverse, low IV means that the market expects to chop. Do I cover trades as well? And it's not really, or is that? Yeah, no, it's related to stocks. So Sean, we do. So we absolutely do. So here's my thing is I can't jump into trades and explain to y'all how these trades are printing out without giving y'all the foundation. I got a lot of beginners in here, so we're gonna definitely talk about some trades because I'm in a couple right now. Okay, so let me jump over to Yahoo Finance real quick. I want to show y'all some stuff. Alrighty, can y'all see this? Yeah, for sure, Sean, for sure. I got you, man.
Yeah, I see it.
All right, cool, cool, cool. Okay, so if you go to Yahoo Finance or if you have Thinkorswim, which is what I primarily trade on, and I'll teach all about that one, you'll click over in options, and this is what they call an options chain. Okay, this is the options chain, and all it tells you is has the ticker symbol. Those are the first four letters, or three sometimes, and then it has the expiration date. Okay, which is May 2026, and then on the 22nd, which is that Friday. Okay, and then it'll jump down and it'll tell you basically the price at which you think that it's going to expire. This is 325 strike. Okay, so because the stock is at 1392, with this strike being at 325, this is well in the money. You're already in profit. Like whoever is 2,000 of these contracts out here and nobody's selling them, they just gonna hold them, or they're gonna exercise them for shares. But that one, you're in the money at that point because your strike price is much less than the stock price, and you're buying calls. I want to go down to another example. So let's go. All right. So remember, we're at 1392. Okay. So the next strike price that's available is the 1395 call. We're not yet in the money. Okay. We're not yet in the money. So with this particular stock, if it's Friday and it expires and the price holds and it stays the same, you're done. You're not going to make any money. It's going to expire worthless. Okay. Do y'all get that?
Yep.
Yep. Yep. There you go, Pam. Yep. I believe I just answered it. So if the contract, all right. So if the strike price is in the money like those other one and the contract expires, what they'll do is they'll just literally credit your account with the options premium. So you've made money. You don't lose it at all. If your options contract is in the money when that option is expired, then you're good. Now, depending on theta, because theta does eat you up the closer it comes to expiring, sometimes I get out of these things totally, or I'll convert them to actual shares if I'm so deep in the money to where I could do that. If I have a 325 strike price and the stock and the share price is almost $1,400 with SanDisk, what I'm personally gonna do is I'm gonna exercise that. I'm gonna go ahead and take the shares. It just makes sense to do that at that point. I'm gonna go back up and show y'all. Where is this at? Okay, so all right, with this strike price being 325, what they're asking is basically what is that? I want to say 100,000. It's like 105. It's basically like $105,800. Okay, you got to add two zeros. That's what they're asking for for these particular contracts, for just one of these contracts. But they're so deep in the money, they're at 325. That's why when you get out of it, say, do you mean selling the shares? No. So you, with options, you never own the shares. Okay. You can exercise a contract, which means you're choosing to use that option, because you have the right to use that option to go and purchase the shares with your profits, and you get to buy them at like say for instance, if you had the 325 contract, well, you now get to buy those at 325. Okay, because you had the right strike price and you had the right to do so. So if you had 325, then you have that ability to do that. Okay. Now, on the flip side, I want to give y'all an extreme example. Now we're about, I want to say, so we're 2 days away. What do you mean by credit to premium? Okay, so the options premium is the value of the contract at the time that you buy it. Okay, I'm gonna give you an example with this one right here. So let's say that somebody out there wants to play the lottery, okay, and they believe that SanDisk is gonna go to 1,800. Remember the expirations date that we're looking at right here. These expire on Friday. Okay, so if these expire on Friday and the price is currently at 1,400, then the likelihood of it making another $400 by Friday is extremely unlikely. That's why this is the contract. These are the options contracts price right here. It is a $35 contract for you to go and purchase it. Okay, for $1. I mean for one options contract, it's $35 for this particular thing, because it is extremely unlikely for this stock to for this stock to touch 1,800 by Friday. So basically, it's a lot. That's why they call it lottery, because you're donating money, basically. Now, if we go and we say, all right, well, stock price is at 13.92 right now, but I believe that by Friday it'll touch 13.95. If you choose that one, then the options contract, this says 51, right? But remember, it's 100 shares in every single options contract. So that's not 51, that's 5,100. Okay, versus $35. And what's the discrepancy? The discrepancy is that it's much, much, much more likely for this stock to touch 13.95, for that particular price to go in the money before the expiration date. You got that one, Pam? All right, you got it, Jay? Okay, cool. Not quite. Can I repeat it? Yes. So look, this is what I'm gonna do. Let me jump to Thinkorswim. I want to show you something real quick. I'm not gonna leave you astray. I'm about to jump into this real quick. All right. Okay, so this is a demo account. I just want to make sure that y'all can see this. Okay. So let's go back to SanDisk. Okay. So with SanDisk, and on this left side is calls, meaning we believe the price is going to go up. And on this right side is puts. Okay. This purple area, let me make this larger. This purple area is all prices that are in the money. That means you're green. That means when the options contract expires, you're going to make your money. On the flip side, if you're buying puts, then you're in the money when your strike price is above the stock price. So this is in the money. But I don't want to I don't want you to worry about puts yet. I just want you to worry about calls. So we're going to ignore these puts on the right hand side. Okay. So this particular, so with this particular data, this data is from May 18th. Okay. So just a couple of days ago, and this is because I'm on a demo account right here. This is because this data is from May 18th. With that being said, SanDisk was around 1317 at that particular day. Okay. When it was at that particular price, there were people that believed that, that the stock was going to go up in value. Because they believed that it was going to go up in value, they offered these options contracts and calls. For the people that believed that it would have went up to 1320, then they would have ended up paying $6,670 for one contract. You got that part? Let me know, Pam. I'm just want to walk you. Okay, you got it. Great. All right. Let's go down. Let's go out of the money. Look, I'm scrolling down. We all black. Okay? We black. On the options chain, when you're in the Don, you funny. All right, so when the options chain, when you believe that this particular option is going to expire, well, you believe that that this particular stock is going to go up. There's no way that you could reasonably believe that SanDisk is going to go to 2,400 by Friday. Okay, but there's some people that actually bought these contracts. They paid $5. Okay, you see this 0.05. Remember, we have to multiply that times 100. So they paid $5 for the stock to go up to 2,400 by Friday. Again, they donated money. Okay. So the closer you get to, so this is way out of the money down here in the black. This is at the money, like these couple of strike prices that are around here. You pretty much kind of like close to the money or at the money, right in this area. And then you got people way up here in the money. Okay. Y'all understand that? I just want to, okay, y'all got it? Okay, good job, Sean. Good job. Okay, so we had a conversation about delta, right? So delta, again, is the likelihood that this contract will expire in the money, which means if you have a higher delta, then your contract is pretty much safe. So what this is saying is all of these contracts have an 87% chance of expiring in the money. Okay? Now, when you jump to these other ones, you'll understand when it's out of the money, delta will decrease. Okay? So we're going to scroll down to this 2,400. What this is saying is that's a 0% chance that this options contract will expire in the money. So again, these people are donating. All right? They call lottery tickets. Do they hit once every 10 years? But yeah, so we'll go more in depth with that, but I want to show y'all also volume and open interest real quick. Okay, so the way, and this is probably answering your question, Don, but the way that I purchase these contracts is I go based off of, let me speed this data up. I'm gonna take it to like 2 or 3 o'clock. Hold on. Let's go to, I'm moving it to 2:30 so y'all can see this. The data's jumping up. Okay. So by this particular point, there's still 18. Okay, so it just updated, but that 1320 call, it went from, I think it was 6,000. What did we say? 6,600. Now that particular one has jumped to 14. It jumped to 14,000. Okay, by the end of that day, because why? Because this 1320 went in the money. Okay, it went in the money. That's how fast your contracts can literally grow in value. That same 1320 at the beginning of the morning was at pretty much 7,000, and it doubled in value just in the course of one day. That particular move had a high delta, and I believe that the open interest was high as well. 1320. Okay. So what I don't like about, and this is, I told on the last call we had that conversation with Thinkorswim, when the market's closed, they don't always give you the volume numbers on demand. That's why sometimes you have to go to TradingView to try to find them. But what this would have probably told us that there was a ton of volume. Like, let's make up a number. Let's say that it was like 200. All right, 200,000 contracts were probably purchased, and then open interest at the close of the day, which means that's how many contracts that were open from the previous night. It was probably 200 volume contracts that far exceeded how many options open interest contracts there were. Okay. Anytime you want to find a good trade, always look for contracts that have volume that far exceeds open interest. If open interest and volume are about the same and it's not early in the day, then you might want to skip it. But if it's early in the day and that stock is moving and you see that volume is 2, 3, 4 times the amount of open interest, that is a key indicator that you might need to hop on that particular trade. Do y'all get that?
Run that back one more time.
Okay. All right. So open interest, right? So just imagine that there's data right here. Okay. Imagine that there's numbers here. Okay. Volume tells you how many contracts that are currently open at that particular strike price. Okay. So I'm just making up a number. Let's say 200 for this 1320 call that we talked about earlier. Let's say that this volume was 200. That's how many options contracts that are currently open. That is the conviction of the market at that moment. That's retail investors, that's institutional traders. This is what the entire market believes. This is how many people believe that that particular stock is going to go up at that particular time. If you see that volume, like this imaginary 200, far exceeds the open interest, which is basically contracts from yesterday, then you know that volume is increasing. And if volume is increasing, then what the book says basically is that there's a likelihood that the stock is going to move in your favor. You got that one?
Yes, sir.
All right, perfect. Okay. Pam, are you still with us? I just want to make sure that you're understanding that. Where's let me get back to my thing. Will trading out of Roth be more long term and not trading out short term money? Okay, so yeah, Roth, you can't touch the 59 and a half, but I wouldn't advise ever trading out of your Roth, even though it's a tax-free account. It just doesn't serve you to be trading with your retirement money. You want to trade with more so disposable income. You don't want to play with yeah, you don't want to play with your money. Okay. Yes, it looks like they're saying more per. Yes, good job, Pam. You got it. You got it. So look, when y'all are trading these options, if y'all going to day trade, you got to look at the delta. Make sure you got a high delta over zero point 0.5 because delta is probability, right? So you make sure that you have over a 0.5, and then also make sure that your volume far exceeds open interest. Those are the two things that I kind of look at. And then I go off technicals, of course, but y'all hear me repeat volume. So that's another thing that I look at is, does my volume exceed open interest? And if it does not, then I'm probably not going to take it. Okay. You want an acceleration of you want momentum, and momentum is basically is volume increasing. Okay. You can look at open interest for the last couple of days, and if that number is going up, because we remember we don't look at numbers in a vacuum, we look at numbers with context. And if these numbers are going up in a couple of days, then you know that particular options contract is worthy. And you'll also notice, and I'll go back to it, but you'll also notice that with a lot of these contracts, the volume and open interest are crowded around like, what do they call them? Mental numbers, like flat numbers, like 1,000, 1,100, 1,200. You're not going to see weird numbers like 1210 or whatever. People like purchasing things that are kind of rounded up. And you'll notice that often enough, anytime you're buying an options contract, most of the volume is going to be around these rounded numbers. Okay. All right, and so finally, we'll talk about charts real quick, and then I'm gonna open up Q&A. Okay, so charts. So we'll do a fundamental class that we talk about valuation and all those metrics I gave you. We'll do a options class where we just focus on that, and then we'll talk about charts. Remember, all of this is still introductory. Okay, so like I told y'all last week, or whenever we had our last webinar, technical analysis is nothing but a visual of what price does over time. That's all it is. It's not Chinese. It's just a visual of what price does over time. Okay. So with technical analysis, I know that y'all have seen these lines and these candles on people's screens. You've seen them on movies. You've seen them on people's cell phones. I know you've seen them at least at some point over your lifetime. What people use these for is to get data to determine where to enter and where to exit. Okay. That's all they do. It just tells you, it's like a roadmap of when I should get in a trade and when I should get out of a trade. I personally don't believe in just using this alone. If y'all ever see me make a trade, especially for a leap or something of that nature, I'm going to look at the fundamentals as well. But I'm always, always, always going to look at volume. Okay. There's a book that I need y'all to get to, and I'll bring it up, or if I don't find a PDF or whatever, but there's a book that I definitely need y'all to get. But either way, so with this particular pattern, this is what we call, yes, there's a book. Yes, it's I'll show it to y'all. But yeah, so with this particular pattern, this is considered an uptrend. An uptrend is only a series of higher highs, okay, and higher lows, okay. I just want y'all to imagine that this right hand side right here, when I'm circling like this, the right side of this box is price, okay? Both of these sides, these vertical lines are price, okay? And on the horizontal axis is time, okay? So as your data comes out, it's going to print out to the right. Data is going to come out from the right. You're not going to get data from the left. It comes out the exact same way that we read. We read left to right. So when we're reading charts, we're reading them left to right, the same exact way that y'all read books. Okay. Now, with this particular pattern, the way that is visualized with candles is, I gave y'all an example here, is it's just going up. You have green candles, which means the price is going up. You have red candles that mean the price is going down. Or you could call those pullbacks, and it's literally just going up, down, okay? But every single time you have a higher high and a higher low. That is how we determine the trend, okay? Whenever you start trading on candles, you'll hear millions of times, the trend is your friend. You always want to trade with the trend. I don't suggest that y'all trade counter trends until you become more advanced. Like Don is able to do it, but I don't even think he's a counter trend trader that much. Okay. All right. So next is downtrends. All right. So with the downtrend, y'all will see a downward slope because we're reading left to right. Okay. It's a downward slope. This is what this shows us is that price is going down over time. Okay. Because we're reading it from left to right. Price is going down. A downtrend is defined as price, basically lower lows. Okay. Every low you see right here is getting lower, lower, lower. Okay. And every high, those pullbacks are getting lower. So these are lower highs. Okay. So you see this high is lower than this high. This high is lower than that one. And this one is lower than that one. Okay. So that's all the downtrend is. Now so stocks don't always move up. You're not countering eyes maybe here that would like to buy for sure. Yeah, for sure. Yeah, not like right. And there's there's another piece of that I want to add on to it that I forgot to tell y'all about, but I'll talk about that. I'm glad you brought that up, Don. We have what's called consolidation, or you'll say the market is trading sideways, or you'll say that the market is choppy. You'll hear a variation of those things, but all that means is that price is not trending and it's just going up and down. It is at that particular moment that you do not want to trade. I can pretty much guarantee that if price is choppy, then there's is more than likely that volume is low. And y'all know me, volume. I'm gonna preach it till I'm gone. Volume to me is one of the most important things in trading. Okay, so if there's low volume, I'm not trading. But what that looks like on a chart is sideways movement. Y'all don't want to trade. Y'all don't want to do that because I mean, you'd be losing money. Okay, so we only want to trade charts that look like this or charts that look like that. You don't want to trade these charts. That's a perfect time for you to just stay out of it. Okay, and let Wall Street figure it out. We're not gonna jump into every fight because if you do that, you will lose money. All right, so what? How do these candles get their color, and like how do we determine what kind of candles they are? So when a candle opens up, each candle stands for a particular moment, like a particular data point in time. Okay, we'll start off when I first teach y'all, like when we go into charts, it'll be just monthly candles, and then we'll work our way down. But let's just say that this is what's called a monthly candle, and you have weeklies, you have dailies, you have 1 hour, you have 4 hour, 1 hour, 15 minutes, all the way down to seconds. But let's just say that this is a monthly candle, okay? So this is a month worth of price action. What this tells us is what this particular stock did for 1 month, okay? The stock opened up at this particular price, and then whenever it closed, like whenever the month closed, the price was above what it opened. And that gives us our color, which means that it's a bullish candle because the price went up, okay, in value. What these particular wicks are highs and lows. This is where price touched during that time period, okay? So price may have went up. So this particular candle price opened up here. So let's just think about SanDisk real quick, y'all. I'll just give y'all an example. So let's just say in that first month when SanDisk opened on January 1st, okay, let's just say it opened up at $700, okay, and let's just say, oh, it went up to 1,000. This is 1,000 right here, okay, but when it closed, oh, it closed at about 900, okay. So all these wicks tell us is where prices have gone, not where they stayed. So y'all just think of wicks as where price has visited, not where it resides. Okay, so that is a bullish candle. At the opening of whatever that time frame is, if it's a month, then that's January, that's the first of the month. And if we're talking about a month, then the close will be clearly the 30th or the 31st, depending on whatever month it is. Okay, that is a month worth of data. If we're talking about daily, a daily candle, then this is basically the opening of the market and then the closing of the market for just one day. If we're talking about hourly, this is minute one and this is 60 minutes. So most penny stocks are smaller cap companies, and I say to avoid them because again, you're playing the lottery. And I'll explain why, Sean. Like I know some people that make some money that trade them, but that they're very, very, very risky. They're very risky. I'm risk averse, by the way. So okay. So with this particular candle, it's the inverse, all right? So let's just say January 1st, SanDisk, or let's say Lulu Lemon, right? So with Lulu Lemon, we saw it, and let's just say it's a yearly candle. The one that we looked at, it was at 324. But by the time it closed, it's at 124. Okay? So because the price closed less than what the open was, is going to come up with the red candle or a bearish candle, which means it went down in value. Okay? I just want to make sure that y'all get that because some of y'all, some people are already traders or whatever. I know a lot of y'all are, but some people they've never seen candles as well. So I just want to make sure that y'all got that. And again, the candle wicks is where prices have touched. So these are not where prices resides. Remember, because price resides at the close. Okay, so this is just where prices visited. This is where prices got to. Okay. So a thing that I want y'all to remember is that you never want to trade off of a candle that has not yet closed. Because if you would have had bought calls in this, and if you would have bought calls based on this candle and it would have opened here, you would have probably thought that it would have went up, okay? That it was going up, but it actually ended up going down against you. So you always, always, always want to wait on the candle to actually print, or we call it candle close. You want to wait for the candle to close before you trade off of it and use it in your trading. Yes, good job. Yep, you're absolutely right. Good job, Diz. So if you're trading off of these candles and you're wanting to get into a particular trade, go down on on your time frame and see if there's some more data that you could determine to see kind of predict where you believe that the next candle is going to go, or disregard the candle that's not yet finished and trade based off of the previous one. Okay. So let me here's one of the books that I want y'all to purchase, or actually not purchase, because I think that BMAC put it in the resources channel. So if you go to the Discord, he dropped the Candlestick Bible. It was the video of I guess somebody discussing it. I haven't watched it yet, but this is what y'all need to look at, because with these candles, there are patterns that are going to help you along your way. You're going to see dojis, hammers. You're going to see double bottoms, double tops, and there's going to be a million other names that y'all are going to hear for these candles. If you learn these patterns, then you can understand how to read the market. Okay. So y'all like candle this, candle that. What does this tell us? So it tells us when to get into a trade and when to get out. Okay. Whenever you're trading, you want to always be aware of support and resistance. And what that is, what support and resistance are, they're just literally floors and ceilings. Okay. Like there's only like a stock can only drop so far, and the stock can only go up so far. Because if you look at every single trade, there's two sides. Trading and investing in general is a zero sum game. And what that means is there are parties on both sides. Okay? You got people that believe the stock is going up, and you got people that believe the stock is going down. And they're going to have a tug of war fight. And whoever has more volume or more momentum is going to win. Okay? And you'll see that Wall Street likes to put their orders around support and resistance. And if this sounds like Greek to you, that's fine, because we're gonna do a whole class on this, and I'm gonna make Don teach y'all. But all right, so let me take y'all to an example real quick. Let me get y'all to an example. Let's see. Okay. You could drop a little knowledge. Yeah. Yeah, Don, I'm gonna put you up there, man, because you know you're the best technical traders, man. I'm more of a fundamentalist. I know how to trade, but I think that you way colder, just in my humble opinion. Okay, so all right, TradingView. This is what we use to trade. Okay, let me share this with y'all. Boom. Okay. All right, so with TradingView, this is what we use. Yeah. Don is a beast. He's very humble, but he's a beast. Okay, so with TradingView, let's go Lulu Lemon. We've been beating up on this stock this whole time. All right, so with TradingView, all you have to do is go to the main website, and you'll type in up in this search bar at the top, you'll type in any single stock that you want. So again, we're talking about Lulu Lemon, okay? Once you type that in and you hit enter, it's going to bring up your chart, okay? And you could do your chart any way that you want. You could do it any color, okay? But on my chart, what these mean is green candles are bullish and red candles are bearish, okay? So let me zoom in, okay? So with this particular stock, all I want y'all to do is spend a week, because I'm not going to dive off into the super details of all of this, but all I want y'all to do is just mark support and resistance, okay? I just want y'all to mark tops and bottoms. As y'all can see here, let me drag this one up, okay? Price bottomed out here, ended up being bullish, and it came down. It went to the same exact price level at 169, probably actually 170. Remember, I told y'all that people like to round up, remember? So price acts funny for Lulu Lemon around 170. Okay. It was a support here, but it was resistance over here, which means it was a bottom. So price touched 170, bounced back up. Okay. Then when it came back to 170, it start playing around. Okay. And you will continue to see that on certain price levels, and they always are like mental numbers, okay, rounded numbers. Okay, so once it broke through, it came back, retested that 170. Okay, then it dropped again, came back, and then tested that 170. So this is a very strong support or resistance depending on where price is at. Okay, all I want y'all to do is just mark. Hold on, is this gonna let me do it right there? Okay, mark tops and bottoms. Okay, here's another support, right? It was playing around 156, probably 150, 155. Okay, all y'all got to do is go to this left hand side, drag, click on horizontal line, and then go find your tops and bottoms. Okay, let me go back. Okay, so literally that's all I want y'all to do for now. I want y'all to identify support, okay? That's a bottom, that's a floor, okay? And then resistance, okay? That's a ceiling, okay? We can't go past the floor ceiling without momentum. And if we do that, then we know that a big price move is going to happen, okay? Now, the easier way for y'all to identify this is what I was taking a class when I had first started about Q Banks, and what he did was he would always start marking them with the line chart. He would mark his support and resistance off of the line chart initially. Okay, so that's how he would mark them. So he would literally come up here to where right next to the time interval, which is this right here. He would just literally click line chart, and then he would just mark his support and resistance based off of that. Okay. All right. So y'all are like, okay, we marking tops and bottoms. What does this mean? Well, this tells you when to enter into a particular trade. Okay. We can see that Lulu Lemon is going down in value, right? Because the price is decreasing. If we go back to that slide that I had showed y'all, let me see. If we go back to that slide that I had showed y'all, remember where we read left to right. So if y'all see that price is going down, follow my arrow. If price is going down from left to right, then we know then it's probably a downtrend. And if it's a downtrend, then we're looking for puts because we believe that stock is going to continue going down. So in this particular scenario, there's no reason why we should be buying calls unless you're in it for a short period of time and you're a counter trend trader. Okay. But again, I don't trade counter trends. So I have a negative bias on Lululemon. So if it was me, I'm only looking for puts. Okay. So let's say for instance that let me see. Okay, so let me move this thing out of the way. Right here, 156. So at this particular moment, where's replay at? Let me show y'all what replay. I'm gonna go, where's the 170? Okay. I'm actually gonna go here to kind of show y'all. All right, so I just took off price action, right? So y'all can see at 156, the price was literally hitting this 155, 156 area, and it was acting funny. Okay, there was probably a lot of orders at this particular stock price. Now, if price is right, price is at this particular point. Let me zoom in. So if price is at this particular point and is playing with our resistance line, okay, because it's under it, this is a ceiling, and it's playing our resistance line, then I'm personally, what the rules say is that if you're in a negative trend, you're going to be looking for an opportunity to buy puts or to short the stock. Okay, but let me take it out of replay. If you would have got into, we were back here. Okay, so We were right here where my arrow is. Okay, so if you were taking puts at this particular moment, and let's just say you took the 156 put, expecting for price to have went down at that particular point, then you would have lost. Why? Because price went against you. And the reason why you would have lost is because you didn't look at the volume down here at the bottom. Okay. So there's these well, actually, there's these bars at the bottom, and what that signifies is volume. Okay. So you just don't want to make these trades off of just the candlesticks. You want to see if volume coincides. This blue line is nothing more than an average. It shows you the average of what volume is for this particular stock. If you would have made these trades thinking that it was going to go down, but your volume is low and it's less than the average volume, then you don't have confirmation enough to think that this would have reacted on resistance. Instead, because it was low volume and you got into this trade when you weren't supposed to, it went against you and you lost your money. Okay? Compare that with here. You could look at this particular volume. Okay? Look at this bar. This bar is huge. This is a big old red bar. That means a lot of people didn't believe in this stock. It's probably around what is that? April 24th? No, that's not earnings. But I don't know what that was about. But either way, with this particular stock, this is a lot of volume. Okay? The trend is overall negative. It's huge volume. Me at this particular point is where I personally would be looking for short opportunities. Price would have went against you a little bit, but if you would have took, like, say for instance, okay, so this is how I pick my strike price. I pick my strike prices based off of support and resistance. So if this is 143, 144, I'm probably going to either do 145 or 140 or something like that, put or call, just depending on the direction I believe is going to go. In this instance, we have a negative bias, so I'm probably going to buy the put. So I would buy the 145 put. And although it may have went against me for a little bit, after it would have literally broke past this resistance because the volume was high, as y'all can see, volume at the bottom going up, I would have made money because I waited on volume to confirm that move. This volume over here is stronger because it's either touching or it's past the average volume, which is that blue line, and that's how you know that your trade is golden and that you can go ahead and get in. Okay. Does everybody, let me see this question. April 24th, there was, see? All right, thanks, man. I appreciate that. I had no idea about that one, Femi. But yeah, so that is why you have this big old volume, okay? Because this was a negative catalyst as for the stock. What Femi told me was that there was a CEO switch. So normally, Wall Street they like stability. They don't like change unless it's like a super great change, okay? If Elon Musk is stepping down from Tesla, the stock probably gonna crash, okay? Unless they switch and tell you, oh, well, Mark Cuban's taking over, somebody that's competent or something like that. That's the only way that they'll make a CEO switch is if they replace him with somebody better and it goes up. But if you have like those dynamic CEOs and they either retire or move out the way, the stock probably is gonna go down. And if that's a negative catalyst, all of Wall Street poured into that to push this stock down. Okay. And if you look at volume and you look at the technicals and they're both on the same page, then you know that that's a pretty much a good trade. So you would have made money all the way down to 120 if you would have held that. Okay. So we'll break down technicals more at a later time. But that's pretty much just an overview of how the technicals work. Okay. So one sec. Let me get back to where's my all right. Okay, so putting it all together. So pretty much y'all have to remember that whenever y'all are like investing, y'all have to understand from what position are you investing? Are you currently trying to look for day trading opportunities? Are you looking for swing trade opportunities? Are you looking for long investment opportunities? Those, you have to be aware of fundamentals and technicals and all those things in all three of them, but you have to know how much of those strategies to use on each one. Fundamentals over time will matter more for long-term investing. Okay. And then the inverse is true. Technicals matter more for day trading. And then leaps are just somewhere in the middle. But yeah, I believe that that kind of added on to what we kind of talked about the last particular time. This is the best time for y'all to go ahead and, ask me some questions and let's dive into some stuff so I can kind of clear up some of the things that y'all may want to talk about.
Do I need to watch that first video that you just dropped
Yes.
on your I think it's YouTube or something?
Yes, you got to drop that, man. Because you got to read that because that has a lot of great information on it, and it'll kind of be like the precursor to all of this. Some of y'all already understand because y'all been practicing for so long. But for those that haven't, this is definitely going to be of value for you.
I got a real quick, easy question because I haven't used TradingView in a while. My VWAP won't show up at the bottom of my chart. So what setting do I have off there?
All right, so that's not okay. So that's not VWAP. That's just volume. Let me pull it back up. That's
Okay.
just volume. Okay.
Okay.
So yeah, it's a difference. It's a difference. Let me pull it up. All right. So all right. Okay. So what you'll do is you'll go to indicators.
Yeah.
Is your VWAP already popped up on yours?
I see value in the yeah, I got it.
All right. Yep. So anytime that's a great lesson. So anytime y'all want to add an indicator, all you do is you just find indicators on the top bar and you go and type in what it is that you want to add. Okay.
Okay.
Now it's hard to see VWAP on these 4 hour charts and stuff like that. You got to really dive off into them on these closer to the minute charts and stuff like that.
Okay.
You know, but reason why people use VWAP is because it acts for Wall Street. It acts as a support and resistance line, and you could trade off of a VWAP.
Okay. How about that volume that
Okay,
you showed down
yeah,
there?
with volume, you literally just the same thing. You go and type in volume on the in,
Okay.
yeah,
Okay.
yeah, it's literally the same thing. You just type in volume and then that'll pop up. Where's my Zoom? Okay.
Got it. Got it. Yeah.
Mm-hmm. Yep. So, oh, the book that y'all should get. Let me show y'all. This is the one that y'all gotta get. Like this lady got me brainwashed. She literally got me brainwashed. But y'all, man, this book's so cold. I keep repeating it, but y'all gotta get this one. All right. This is the book right here. Okay. This is the book right here that y'all gotta get. Everybody take a screenshot of that. So with this particular book, she goes into not just why volume is the most important indicator. It's basically she's reading the market before candlesticks even pop up.
Mm.
Yeah. So this with this particular book, man, it just you'll see how the market's manipulated. You'll see like moves before they happen. That's why I'm able to like see a lot of stuff before these candlesticks pop up. Man. What's going on? Let me see, Femi. I don't know. Femi, can you unmute yourself?
Yeah, yeah. Can you hear me?
Yeah, I can hear you, brother.
No, I was gonna, whenever you were done with the book, it was a question regarding marking up charts. Is there like a rule of thumb? Because I know that was the 4 hour that you were on, but like, is there like a rule of thumb that you recommend to mark up charts just like support and resistance so that you could be able to reference them? But just wanted to see if you had like a starting point on that.
Absolutely. So it depends on whatever it is that you're trading. Okay, so if you're day trading, then obviously you only want to do the you want to look like briefly look at where price is relative to daily and weeklies for day trading. Like you still want to be aware, even though you're not trading off of it, just to see the overall trend. But then you want to dial down and you want to get your structure off of the 4 hour when you're trading daily. And then after that particular point, you want to you want to get your structure from the 4 and the 1 hour. And then after that point, what I do is I trade off of the 15 minute.
Okay.
Okay, so like I'll,
Okay.
so I basically I say it's like a top-down analysis. You want to be aware of what price is and get your overall trend from the daily and weeklies, but you want
Uh-huh.
to literally want to get your structure from like the 4 and 1 hour, but you want to trade, make your entries based off the 15. So if I'm
Okay.
entering or I'm exiting, then I'm looking at that last 15-minute candle before I make my decision. Now,
So
go ahead.
so if you're so you're looking at that 15 minutes to determine what your entry would be, like whether if it makes sense, if it's like following structure, right? Like if it's maybe if you're seeing that if it's in that overall trend of like, okay, it's a call, so then you'll get into a buy, right? So um is that what you're doing when you're in that smaller time frame?
Yes,
Okay.
absolutely. Yeah,
Okay.
you got it, brother. You definitely got
Okay.
it, man.
Okay. Cool. Cool.
When
Cool.
it's yeah, man, don't see you heard it from the goat. You heard it from the goat. He just dropped it in there. When it's leaps, I'm gonna show y'all that meta because y'all I was at that 600. Okay, so with this when it's leaps, let's remove. Okay. All right. So yeah, I don't know if y'all remember, but whenever Meta had reported earnings, okay, so when they had reported earnings and it dropped down to 600, let me move this out the way. Okay, not that far. I want to show y'all visually on the screen. All right, so at the bottom, if y'all look, y'all see here, it says earnings. On earnings, that's a lot of negative volume. Okay. And although the trend is down, well, the recent trend is down. I think that structure was actually broken into once it broke past here. Because if you look at this previous support, price actually broke it past it. So it's actually structure was broken. But either way, when earnings was released and it dropped from 673 down to 600, I picked the 600 call off that purpose. Everything that I believe in when I'm analyzing a stock coincided at the same point. Volume was extremely high. Y'all can see here. So volume was higher than open interest at this particular moment. Okay. It was a great stock. And fundamentally, I believe in Meta. Ad revenue is growing. It's a great company. He's going to continue to do well. It was a great stock. It had touch support. This previous support over here. Volume was high, and then I think the deltas was good. So I was like, why not take the year leap? So I took the 600 call, that leap, and I entered right around this area. So right now, with all of this exhaustion on these particular candles, I'm just holding. I believe the price is at least going to get up to 745, which is this previous high right here, at least. And if it does that in a sufficient amount of time, then I should make a pretty decent profit.
And you took a leap on that, or you're trading it shorter?
No, that's elite, man.
Okay.
Yeah. So
But it's
yeah, I took the 600 meta, and it's
mhm.
still somebody asked me, is still the window is still open? I think it was Chuck. He not here, but I think Chuck asked me. All right,
Yeah,
so the window's still open because price is still around 600.
yeah. So you expecting to get out right at that? So even if let's say you took it for 9 months,
Mm-hmm.
if it hits that what's that
45.
720, 740? Yeah, you'll get out at that 740, or since you got time, wait and see how it goes, because it looks, I mean, it's trending up in the long term. In a couple of months it could be, even it'll probably get to that maybe 760 in the 6 months or something like that. But you'll take the money rather than waiting for it to go all the way up to something higher than that resistance.
Well, so it depends, right? So if I have a lot of time and theta is not a factor, I'll hold on to it because that's a smart thing to do. Especially if it's
Hmm.
gone. Sometimes I'll take my initial investment out, and then I'll just say, okay,
Leave the
with
rest.
these profits, I'll let these ride.
Yeah, yeah.
Uh-huh. And that's
That's what I
sometimes what I'll do. It's really just a case by case basis. But if man, I'm
use.
telling y'all, man, if I'm throwing a party for the group, if if Meta hit 745 like by like August, we doing a party. That's all I'm
It's
telling
up.
y'all.
It's up.
It's up, man. We gonna party. Like as my gift to y'all. If it hits that, by that point, which I believe that it is, I done did the math on that one, and it's gonna be crazy. So yeah,
You just
so
gotta have the capital to put in.
yeah, I mean, so yeah, that's another thing,
Mhm.
right? So that's what Angel be preaching to me. She be on me about that one. International is crazy. I ain't say international. We gonna be right here in Houston. But anyway, so no, so Angel be she be getting on me about like these contract prices, and I apologize, y'all. I be buying these expensive ones, but I'm gonna dedicate myself to finding some that are sub like 500 contracts, like leaps, to see, because I do be buying some expensive ones or whatever, but it's like the expensive ones are the ones that be making money. So I'm gonna change, not change my strategy, but I'm gonna add to my strategy and find some that are a little bit more affordable. Okay, he said, "B man, you be telling, right? I got you, man. I promise. I'm gonna do better on that one, y'all. But I'm gonna find some. I promise y'all, I'm gonna find some leaps that are right in that like anywhere from like 3 to 500 range, and then we gonna get to it, But that's why that's why I'm teaching y'all as well, because I want y'all to be able to like find these opportunities for the group, and we can share them with each other. We can definitely share it with each other, because if we all could get on this money straight, you funny, Jay. But yeah, if we can all get on, then why not? Yeah, that's the whole point, man. As far as all to learn, share the knowledge, and we all put each other on game. That's my long term vision. I'll teach y'all what I know, and then once y'all go off on y'all's own journey, y'all come back and y'all teach me stuff, because I don't know everything at all, you know. But yeah, so that's yeah, Black Wall Street, exactly, exactly. So that's my take on it. If y'all see those opportunities, y'all let me know. I do want to say, Jeremy Financial, if y'all look him up on YouTube, he's been talking a lot about this stock called TTD. I haven't really dived off into it, but he's been talking a whole lot about it. So y'all add that to y'all's watch list as well, and maybe we could break that down the next time that we all meet. But he's been talking about it. I just added to my watch list, and he just been I haven't been paying attention too much, but he just keeps bringing it up. So I'm like, man, let me look at it, because I don't know if y'all know who Jeremy Financial is, but he's pretty cold. He's mostly a fundamental investor. He don't really like trade, but he goes in and like he's focused on actual shares and fundamentals and income statements. But he has preached TTD for a while now, so y'all need to check that out. And I'll actually send y'all a video on that one. And there was something else that I've been looking at that I wanted to tell y'all about. I can't even think of the stocks. No, TTD. This one is TTD. It is. Hold on. I'm gonna tell y'all about it. The trade desk. So it's $20 a share right now. Okay, it's $20 a share. Is down 72% in the past year, but he said that something fundamentally had changed or whatever. But I'll send y'all the video so y'all can check it out. And then what else am I in? I'm in a bunch of space stocks. Y'all know, what is the ETF that I was going to tell y'all about? Oh, but shoot, BTCI 40%. You already know about that one. It's that 38%. That BTCI, I'm swearing by that one. Like, yeah, I'm swearing by that one, because another thing is, as Bitcoin goes up and that NAV goes up, you're gonna make money both ways. You're gonna make money on the dividends, and you're gonna make money on the overall depreciation of the stock. So y'all gotta like add that BTCI to your portfolio,
Yeah,
or that's my
that's
suggestion. I'm
nice.
not telling y'all what to do, but I highly suggest it. You know, put a couple dollars over there. I think it's only like $35 or something like that, a share or something like that. Good. I'm glad you did, Don. I'm glad you did, brother. But yeah, so are there any other questions before I jump off?
Yeah, I have a question about like capital gains, and then if like this is kind of like a two-part question. So like, if I'm just not getting started and I want to know which brokerage is it like specific, and then also like capital gains and I guess a CYA at the end of the tax, year, like what we need to do with that.
Yes. So first, you want to consult a tax professional. If you don't have one and you're in Houston, I could suggest some good ones for you. But you
I'm
definitely
in
want to.
Dallas.
Oh well, Dallas, they may work with them just because you're still in Texas. You know what I'm saying?
Okay, okay.
Yeah, But either way, I can send you their info. But yeah, so they and not to get on a tangent, but I practice law outside of this or whatever. And like the way I found them was that I was just focused on like preserving my capital, because it gets to a certain point where you make like when you get to making like a certain amount of money, you want to keep your money. You don't want to be paying Uncle Sam. And so they were the ones that kind of taught me about cost segregation. And so I went on this like house shopping spree because of them. So they was able to write off and save me like a lot of money. But I'll send them to you. So I would say consult them about taxes. I'm not the tax expert, to be honest with you. I know a little bit about it, but I'm not the tax expert. Um, and then in terms of capital appreciation and like the right brokerage, you want to go with something that you're comfortable with. A lot of people start with Robinhood. Me personally, I kind of like Robinhood is made for beginners. There's more tools that are available with Thinkorswim, which is Charles Schwab, and E-Trade, and then Fidelity. That's you kind of graduate into those. So I would say if you're at the point where you're just kind of getting started, then there's nothing wrong with Robinhood. You can make money on Robinhood. BMAC is living proof of that. He just showed me some crazy returns on Robinhood. So yeah, don't be afraid. Don't be afraid to start there, and then eventually we can get to the other stuff. I will say that don't trade and invest out of the same account. Keep them separate. Okay. I have like 3 to 4 different accounts. I have my, well, more than that, but for the most part, if you kind of generalize it, I have my long term investments. They're all with Fidelity. Most of my leaps are with E-Trade. I have a couple leaps with Fidelity, but most of my leaps are with E-Trade. And then my day trading is exclusively with Thinkorswim, okay, because of their platform. And the purpose of, somebody say, well, why not just have them all in the same platform? Well, whenever you lose a trade, like if you're anything like me, I was losing trades sometimes, and then I would just go, oh, well, let me go over here, take this money out of this account, and then put it in my trading account so I could go get it back. First off, you're going to increase your taxes, and then second off, you revenge trading. Okay, so I had to put those safeguards up to make sure that I was more disciplined. So that's kind of how my setup is now. But I would say start with Robinhood, and then we can talk about the other stuff later.
Yeah, yeah. Well, I was like, I don't know if you knew about the Robin Hood thing, like I don't know if it was like Silver or it was like, no, it was like GameStop or something like that.
GameStop and they
They like
paused.
shut down like their whole entire thing. And I was like, man, that's what kind of gave me like a funny sour taste in my mouth about Robin Hood. So
No, man, I remember that, man. I remember that. And then when everybody asked them why, they tried to give some crazy reason as to why. And now a lot of people forgot. I'm glad that you still remember that. That was around like 21 or 22. It was like COVID time or something like that.
it was
But
like it was like the
yeah.
Wall Street bets thing.
Yep. Yep. I remember that. I definitely remember that, man. Since then, I don't know how they've improved, but if you don't want to learn, I could walk you through all those other platforms that I just taught you. Like they're not more difficult. They just have more tools, so it could become more overwhelming. Versus, Robinhood is like plug and play. Like it's built for people that are beginners. Versus this one, you kind of got to jump through a little hoops. Yeah. I say you don't like where you go. Yeah, that's real. So Angel just brought up a great point. She said she don't like anywhere that she can't go in and talk to somebody. So with Robinhood, like with their customer support, I think if you like call, they like you gotta leave like voicemails and all this other stuff.
Oh, yeah, that's not it.
Yeah, that's not it. If you go with like Fidelity, man, I call them over the weekend, like 2 in the morning. They gonna answer 24/7. It don't matter if it's Christmas. Them folks will answer your phone call. So that's why I like Fidelity. Maybe because they manage so much retirement money, that might be why they're so accessible. But man, try, like long term, I say Fidelity. Trading, I use Thinkorswim. So yeah, yep. TT, you love Fidelity? Yeah, she uses Fidelity. That's right. But I know people that have a good relationship with Robinhood. I know BMAC trades, with them. So it just, I don't know, man. It's just kind of hard to say. I would just say, do what you're most comfortable with. At the end of the day, they all do the same thing. All of their fees are very, very minimal. So the edge is not going to be in the fees. Uh-huh. Yeah. See, okay, and Double O uses it as well. Okay. Yeah, it's not. It's not. Um, I don't know how they've improved, man, but I would just say, do your research and just pick the best one. Either way, I would say that there's enough people in this group that are on pretty much all the platforms that we could kind of give you game on each one. Besides Tasty Trades, that's another one that's kind of a lot of people been going to is Tasty Trades.
You had long term. You said for long term fidelity, leaps
Yeah,
is trade, day trade, thinkorswim. What's the
yeah.
fourth one?
Tasty Trades. A lot of people go into Tasty Trades because of their platform for trading. So check them out as well. You want to check them out. But yeah, so man, I want y'all to get more active in the Discord. I'm gonna keep preaching that. Don't be afraid to drop stuff in there. A lot could be learned from y'all's experience and things that y'all find. I hope that y'all have been watching CNBC more. I hope that y'all are start at least opening that chart and breaking this stuff down and learning. I'm here as a resource. Don is here as well. We got Femi, who's been around for a while. BMAC's been around for a while. Y'all just come and y'all come learn. Comfortable with the view. Yep, that's exactly right, Double O. Double O, he does his thing too. Like we all here, and I'm just trying to build like a traders family where nobody's embarrassed to come and ask some questions. Like we all could literally lean on each other to try to profit because at the end of the day, that's the ultimate goal. So, oh, add GEV to y'all's watch list. GEV Vernova, and then there was Mars and UFO. Y'all gotta ask those space traders. Yes, in the future, yes, we will be dropping signals. Yep. Once I get all the infrastructure set up, because we still growing pains and trying to figure out all this stuff, then yeah, we're gonna get to that. Uh-huh. Because I've been like, I got that leap that I told you about. And then I'm breaking down some more stocks. I'm about to long term invest in a couple more. Y'all know I'm about to do SpaceX. OpenAI is coming as well. I'm gonna do that one as well. And then like day trading, I'll be in SPX a lot. But if y'all want something that's less expensive and less risky, then y'all could do SPY. So when I do drop those alerts, y'all will be able to trade off of both of those. So,
All right, quick
but
question before you go. For the IPOs, right? Because
mhm.
I don't like trading IPOs. Too much
Yeah.
volatility is too much risk involved in there. Like, how do you play those? Do you play those in the short term, or do you play them long term because you know it's going to be real volatile in the first, couple of days, week, month?
Right. So man, I'm a like normally I don't buy normally I don't
They
buy
expensive.
IPOs. Go
Yeah,
ahead.
they be expensive when they first come out and shoot right up,
Man,
and
yeah,
then
they be
might drop.
expensive, risky, and all of that, man. But somebody had asked this question. I think it was Dez, but I don't like IPOs normally because we don't have price data and we don't have their fundamentals, right? It's like I need to be able to dive off into their fundamentals. But I ain't gonna lie, I'm kind of buying into the SpaceX hype, so I'm gonna break my rule. But understand that this is the clear exception to the rule. Like IPOs come out every day. I skip them. I'll be like, all right, I'll analyze you later. You know what I'm saying? But I'll be liking to see at least like 2 3 years of data and numbers. But with SpaceX, I think that there's so much hype built around it that I do think that yeah, they definitely always fall. You know what I'm saying? I might briefly like look at some technicals for like a week or two and then just jump in, but I'm super excited about that one. So I'm gonna break my rule on that one. But y'all don't follow me on that one. I'm just gonna break my rule on that one stock.
So I was
Whoever
gonna
gets
ask you, when you come in on like an IPO, do you try to come in first day and just try to get it as cheap as you can, or do you wait for it to calm down the first month?
right. So like normally with IPOs, I kind of wait like 2 years on most IPOs. If it's that's my general rule, but with SpaceX, I'm breaking that rule just because of the hype. You know what I mean? And I know I say I don't buy meme coins and all that other stuff, but all right. So here's the thing: I've looked at and here's a great question, Pam. So I've looked at the suppliers for SpaceX. I've looked at the space industry. I understand what they're about to do with AI data centers. Jeff Bezos has spoke on data centers there. Jensen from NVIDIA has spoke on data centers there. Elon Musk already has a successful company in Tesla. Like all signs lead to this being a very beneficial company because of the parties that are involved. And because of that, that is my exception of why I'm going to do it. Now, Pam, you made a great point. Do I look at the supplier? So I have a list of like 60 companies that are somehow involved with SpaceX. I shared it with BMac a couple days ago, but I'll in our group chat, but I'll drop it in our Discord so that you could check it out if you're in the Discord. But it's like 60, it's literally 60 companies. I don't know if y'all can see it. Let me see if I can see it. But yeah, like it's like however many, I think it's 60. But yeah, 60 companies that I'm personally breaking down right now that should benefit from SpaceX. Everybody calls them picks and shovels, right? Sometimes you don't even have to go with the market leader, such as the big companies. Sometimes you can go with their the companies that they're vertically integrated with in order to benefit, and those companies are often profitable as well. You can look at it like a proxy kind of. But yeah, I'm gonna drop this one in the Discord so that you can check out all of these stocks. But yeah, it's 60 of them.
This is my last question. I'm gonna stop asking questions. But like, what about foreign exchange, like Forex, and then when's the next webinar?
All right, so okay, so Forex, man, that's how we all got started. That's the funny you bring that up. So that's how me and the group got started. We all did Forex, but we were like trading Bitcoin and Forex and crypto boys and all that. So Forex itself is not a scam. It's just that it's got a bad taste because of the people that were involved.
Oh,
So
I know. I was yeah.
yeah, man, like these scammers and they was like, setting up Ponzi schemes and all of this other stuff. But either way, man, I personally Forex is a great. I mean, you can trade and make a lot of money. Like it's a legitimate source of income. It's just the parties that are involved and have these like different like teaching groups and they're taking money from people and you go get two people to go sign up three people and all this stuff. Like if it gets to that pyramid scheme stuff, I've always skipped it. But Forex as a financial product itself is very, very, very lucrative. And that's how we all started. That's how most of us started. Okay. And yeah, so all right, so T, so the if you go to heavyreturns.com/discord, then it'll put you in our group chat. Just go to heavyreturns.com/discord, and then you just literally just sign up, you know. All right, no problem, no problem. So yeah, oh, you gonna thanks TT. Okay, so all right, so yeah, y'all, I'm here as a resource. I don't know if Jay is comfortable with us recording the coaching sessions, but if he is, I will share those with y'all. Again, he has 3 hours to ask me anything that he wants to about trading. I'm going to provide to him $1,000, and hopefully he can flip that into millions. And yeah, you know what I'm saying? We'll go from there. The next webinar, I'm not sure when that will be, but I always go based off y'all schedule and what works with y'all. I think we've done the two previous ones on Wednesday, so maybe we might do like a Wednesday thing. But if I could get at least 10 members in every single Discord, I'll continue to do them for however long. But the next Discord, I'm not Discord, I keep saying Discord, the next webinar. With the next webinar that I do, I'll probably focus on what y'all think I should do next. Should it be valuation? Should it be technicals? Or should just be straight up day trading stocks? Like what
I
I'll let
like
y'all
I like technicals and day trading stocks.
okay, let's combine those two and I'll leave fundamentals to the next one. Everybody say day trading, okay. All right, cool, 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 cool. Yeah,
And then the
go
last little
ahead.
thing I say would be like on the Forex thing, that's something that you would advise to like learn yourself.
So I wouldn't say learn. Okay, so I wouldn't say necessarily learn it yourself. I personally don't do it anymore because you have to be aware of like so you have to be aware of diplomacy and like these relationships of these countries between each other. You got to be like number one like a history buff, and then you secondly you have to be aware of like the geopolitical factors. So you like getting American news is enough. I can't be aware of what's going on in Britain, what's going on in this, and what you know what I'm saying. And
Yeah, I feel
it's
it.
a lot, man. It's a lot. But I'm not saying you can't do it at all. I'm not you too funny, Jay. Yes, I have a YouTube. If y'all go to youtube.com and just type in heavy returns, then y'all can subscribe, and that's where I'll drop the weekly outlook. Okay. But yeah, but nah. So I'll man, I'm not telling you not to trade forex. I'm just saying that that's not my area of expertise. If you do personally want to trade forex, then go to www.babypips.com, and then they have an educational program, and it'll teach you not just technicals, but it'll kind of teach you how the currency pairs work. Um, you do have control of your money, but it's unregulated. A lot of these forex brokers are offshore and unregulated, so there's no way for you to in the event that something happened, like you said that your concern was Robinhood and how they froze the money. If that is a legitimate concern, the forex may not be for you because most of the most of the brokers are unregulated, and then the ones that are regulated, they don't give you enough leverage, so your returns are not that good. You know, your returns are really not that much with those particular like you have like FX Glory and King of Trades and Trade Locker and all of that. Like some of those are regulated, but it'd be like 1 to 200 leverage, which means you're not making that much money versus you can go to like we used to go to JAFX and it had 1 to 1,000 leverage. And that was when we was doing crazy numbers. But yeah, so it's up to you. You
Nah,
know what I'm saying? It's
I hear
really up
you. I
to
hear
you.
you. I hear
Yeah.
what you're saying.
Yeah, you know what I'm saying? Like, I'm not gonna tell you no, I'm not gonna tell you because everybody's experience is different, right? I'm gonna say get the bag or whatever you do, just get it.
Yeah,
You know what I'm
I can't
saying?
hand up freeze in the
Yeah.
bag now.
That's it, bro. That's it. Whatever you decide, you know. So,
Yeah,
but yeah, man. But yeah, I appreciate y'all letting me ramble and talk to y'all for 2 hours. I apologize.
we
But
appreciate
yeah.
you, brother, man. Appreciate you, man.
For sure, man. I hope that everybody learned something. You're welcome, Angel. I hope that everybody on here learned something today. You know, but if y'all need me, y'all let me know. Maybe we might do every other Wednesday. So, you know, give me time to kind of get caught up on some other stuff because I want to provide value. I don't want to have these and I'm not providing value. So I say if I had at least 2 weeks to kind of prepare for the next webinar, like in between, if we do every other week, that would give me enough time. You know what I'm saying? Because a lot of research goes into some of this stuff. Okay, so I would say let's plan for that. What would that be like? That first Wednesday in June around 7 o'clock.
Yeah, that'd be
Well,
good. Like,
yeah,
'cause I'm doing master engineering. I'm doing other stuff too. So
you grinding. So you understand, right?
I'm
Yeah,
grinding, bro. Yeah.
yeah. I get it. I get it. But yeah, so yeah, June, let's do June 3rd. We'll do 7 o'clock. I'll update the Discord link on the website. Or not the Discord link on the website. I'll update the Zoom link on the website. You're welcome, T. And then y'all can just join and just add that calendar invite, and then we'll go over more stuff. But going forward, I do want y'all to start. I want y'all to put in more input. So what we're going to do is I'm gonna start giving y'all homework to where we could break it down because I need to understand that I need to make sure that these concepts. You welcome, Monk. I need to make sure that these concepts are getting through to y'all. So what I want everybody to do is homework is pick one stock that y'all are going to present on. Okay, just one. I just need one. And I just need you to talk to me through a stock for 5 minutes. And we're gonna see whether or not if that stock is under undervalued, overvalued, fairly priced, and whether or not it will be best to day trade, take leaps, or invest into that particular stock. And it could be any one. The only rule that I because here's the thing, I don't want to have everybody doing the same stocks, right? So the only rule is that y'all can't pick none of these major stocks. Matter of fact, look, I got one better. I'm gonna drop that the space 60 in the chat, okay? And y'all just pick one of the space 60 that's in there, okay? And we're gonna discuss that one. And the focus of that particular talk in 2 weeks will be. I got you. I got you. I'll redrop it, Jay. But yeah, so the focus of that next one will be day trading and technicals. But I'm still wanting to talk to y'all about value and growth companies because it is different the way that we kind of look at those as well. But yeah, so I'll drop that. I'll drop that homework in there. And yeah, so just put that on y'all calendar for next Wednesday. If y'all need anything else, y'all know where to find me. I'm always in the Discord. And yeah, y'all stay tuned. Please subscribe to my YouTube. I'm asking y'all to do that. Anytime y'all see me drop something on social media, I'm asking y'all to repost.
Hey, I
You know what
got you.
I'm saying? Like that's all I ask for. That's it. That's all I want. You know what I'm saying? That's it.
I help you build your brand. Yeah.
That's it, man. I just want to build a following, bro. I just want to build a following. So, but yeah, y'all all have a good night. You and this Facebook angel. Ain't nobody on Facebook but you and my mama. That's it. That's
Hey,
it.
I'm on Facebook kind of loud now.
For real? Shit,
Facebook Market,
where I
Facebook
been?
Marketplace, man. Facebook Marketplace, man.
Oh, okay. See, I'm over here judging. I ain't know. All right.
Find anything on there. I'm telling you.
For real? See, I had no
Got
idea,
vending
man.
machines. They got hats, t-shirts, clothes, cars.
That
Bro, it's an open
that
marketplace right now, bro. It's crazy.
that. So look, who owns Facebook?
I ain't gonna lie, I don't know.
Meta, and
Okay,
that,
yeah.
and that's what. Yeah. So that's good news because I was just thinking about ad revenue. I didn't know that it was diving off into all that other stuff.
Oh yeah, it's a
Yeah.
whole yeah.
That's good. That's good. All right. So I'm gonna start a Facebook. Lord, I know, man.
Yeah.
So you can put me on. Yeah, Angel's wild, man. But yeah, y'all. So y'all get out of here because y'all gonna have me keep talking. So y'all have a good night. If y'all need me, y'all know where to find me. Just jump in the Discord. I'll drop the 60 stocks there and homework for the next webinar. But y'all go ahead and have a good night. You're very welcome, and I will upload this to YouTube in probably a day or two. I just need to send it to my editor so he can edit it for me, and then yeah, that's it, y'all. All right, good night.